One of the biggest mistakes that new investors make is waiting. They wait for the market to crash, they wait for rates to drop, they wait for prices to pull back. Waiting is not a strategy, it's hesitation disguised as logic. So if you're trying to build long-term wealth through real estate, I'm going to show you why I don't worry about market timing and why you shouldn't either. So let's straighten this out. Timing the market is gambling, it's speculation. It's not timing the market, it's time in the market. That's investing. So if you're focused on when to buy, you're thinking like a trader, not like a real estate investor. Real wealth isn't made by guessing, it's made by owning quality assets. Finance smartly held over time and run like a business. Here's what I mean by that. When you buy a property, I'm looking for 5 things: cash flow, long-term finance, value stability, operational control, and exit strategy clarity. So if a deal checks all 5 of those boxes, I move on it. If they don't, I don't panic, I execute. Let's break each one down. Cash flow isn't optional, it's the oxygen of your portfolio. I'm not talking about break even. I want to see positive net income after your mortgage, your taxes, your interest, your property management, vacancy reserve, maintenance, and CapEx. Why? Because that's cash flow. It shields you from market swings, gives you margin when tenants turn over, lets you reinvest and grow, buys you freedom from your 9 to 5. I build in conservative assumptions to stress test every deal. If it doesn't cash flow after 8% vacancy and 10% property management, I pass. This is how you're becoming house rich but cash poor. Your business has to breathe. Cash flow make that possible. Don't just run the surface numbers though, run real numbers. And ensure that you're running the correct numbers. Whether you're flipping houses or scaling your rental portfolio or crushing it in the BRRRR strategy like I do, you need a tool to simplify the chaos. And right now we're using Flipper Force. It's where it comes in. I've been in your shoes trying to keep it all together, but now I use Flipper Force for every single rehab project and deal analysis. It's an all-in-one platform built specifically for real estate investors. With Flipper Force, you can analyze deals like a pro, whether it's a flip or a buy and hold or a BRRRR property. You can estimate your rehab costs accurately so you never blow your budget. You can plan your project schedules from start to finish and stay on track. And you can even track your own expenses in real time so there are no financial surprises in the long run. Last, you can organize all your photos and documents, keeping everything in one place. That's why I use Flipper Force. It streamlines your process, saves you time, and it keeps your business running smoothly. I used it for flips, BRRRR deals, and rental property analysis, and it's been a total game changer. If you're ready to see for yourself, click the link in the description below and sign up for 30 days free and a 25% discount on future fees. Trust me, it's the deal that I currently use. It'll take your real estate investing to the next level. The link is in the description below. Financing structure. Don't waste time trying to outguess the Fed. You're not a rate predictor, you're a real estate investor. So here's what I use. VA loans are 0% down, fixed rate, low barrier to entry. FHA loans, 3.5% down, great for house hacks. Conventional loans, somewhere between 5 and 25%, or DSCR loans, which are cash flow based for experienced investors. Key here is long-term fixed rate debt. Gives you predictability and protection. Variable rates are tempting, but they add risk and stress. We don't need more stress in real estate investing. Rates can go up and down, but if your payment is fixed and your rents are rising, you're winning every single month. And if rates drop later, you just refinance and come out ahead. All right, value stability. I don't chase hot markets, I invest in stable ones. I want to know that if the market slows down, people are still moving in, getting jobs, and needing housing. I look at local economic anchors, commute times, housing inventory levels, legislative risk, job creation programs. If the foundation is strong, the property is going to perform even when the market doesn't. Focus on durable demand over flashy appreciation. Next, operational systems. You don't need to build freedom building a second job. You build freedom by building systems. Here's what I delegate. Lead generation, VA source, quality leads, manager screening, lease maintenance, route it through Vendoro or VA task boards, accounting, QuickBooks, weekly reconciliations, all that kind of stuff. This is how I run multiple properties without babysitting any of them. One of my best decisions early was using REVA Global. Their VAs are trained for real estate investors. They cover cold calling, appointment scheduling, transaction coordination. One of them is running my property management company, lease renewals, CRM updates, QuickBooks inputs, maintenance triage, all that kind of stuff. Next is exit strategy clarity. Every deal, you have to have an exit plan. I don't gamble on the maybe. I know exactly what I'm doing before I close. Buy and hold, and I underwrite it long-term for cash flow. BRRRR, I calculate my ARV, look at my refinance options up front, lease option, document the terms you know for your target buyer. You can also ask, can you pivot to a different strategy if something changes? What if the refi market tightens? What if the rent doesn't hit my projections? Plan that back up before you ever even sign the contract. That's what keeps investors in the game while everyone else is folding. Let's talk about the 3 big objections I hear the most. What if your market drops? If your property cash flows, it doesn't matter what Zillow says. Rents don't typically crack, especially in the right neighborhoods. If you're buying for income, you're insulated for price swing. And in the downturn, it might be the perfect time to buy again. But what if interest rates go down is the next one? Then, well, that's a win. You own the asset, you're not in a bidding war, and you don't have to worry about it when the rates drop. You just refinance, you improve your cash flow and your position on the property, you keep the equity you already have. Well, it's not the right time is the other one. And there's no such thing as perfect timing. What you need is perfect execution. Deals exist in every market. Your job is to find the right ones that make sense and take action. This is where most people get stuck. They often try to outsmart the market and end up watching from the sidelines while other investors grow. So you want to use something like FlipperForce to make sure that you have accurate rehab and hold analysis, your ROI breakdowns, your scenario planning, and multiple exit strategies, data decision-driven making. I give my students access to FlipperForce inside my mentorship because it eliminates the guesswork and builds confidence fast. So if you're thinking, Bud, this is great, but I still don't know where to start, well, that's exactly why I enlisted the Entrepreneur Mentorship Program. Inside the program, I walk you step by step through finding and funding your deals, even if you're just getting started, how to use the REVA Global to offload your workload to virtual assistants or run the numbers correctly with FlipperForce, building systems that let you scale with confidence. It's designed for veterans and first responders who want to build real estate businesses that work without burning out. So here's the next move. Start by going in and running 5 to 10 deals through either FlipperForce or a calculator of your choice. Book a call with REVA Global and get operational help lined up. Apply for the mentorship and stop doing this alone, even if it's not with me. I highly recommend you getting a coach. You don't need perfect timing. You need to take decisive action. Till the next video, aim high.